Well, it's known as, if you like, the central bank for the central banks. What we mean by that is that it's the, if you like, the forum whereby central bankers meet, and senior central bankers from all the major central banks meet there once every 2 months. And they have off-the-record discussions. They coordinate their thoughts in terms of monetary policy. They inform the others what they're doing and what, the problems they may be encountering at any one particular time. They get advice from other central bankers and so on. And as the forum for central banks, obviously this extends towards the Bank of England international settlements having a regulatory role as well. Going way back in the last World War, for example, it was very controversial insofar as it stored some Nazi gold. Now, the fact of the matter is that the Bank of International Settlements is based in Switzerland. Switzerland is a neutral territory. And not only that, but the Bank of International did not take sides in the Second World War. So, it had this role. And contrast that with the situation today over Venezuelan gold, for example, where the Bank of England turns around and says, well, no, we're not going to send you the gold, your gold back, or your nation's gold back, because we don't believe that you're a legitimate government. That is not something that the Bank of International Settlements would have done in those dim and distant days. But things have changed. The regulatory role now, which we know the Bank of International Settlements most for, is the Basel Committee, which comes out with bank regulatory standards, which are applied really internationally. And it's done away with the old fractional reserve banking basis. And what it does is it's introduced new methods of determining risk limitations, the sort of things that banks can actually do, how they should regard government debt, how they should regard commercial debt, and so on. So there's a whole plethora of regulations. And when I was a director of a bank, even back in the year 2000, 2002, we had Basel regulations then. We've been through one. At that stage, it was Basel I, Basel II, and now we're on Basel III. Now, Basel III in particular is the response to a request by the G20 group to the Bank of International Settlements to come up with new regulations to stop a repeat of the great financial crisis of 2007, 2008. And that is where the headlines really come from today. If you're talking, for example, you'll have come across lots of stuff about the net stable funding ratio and how it might affect banks' dealings in gold and silver derivatives and things like that. Now, all that has come out of the Bank of International Settlements. And indeed, Basel III is still producing regulations, and there's another set of regulations due to come out, which, these things sort of have been deferred, but because there's a consultation process that goes on, and also when you get a crisis somewhere, they say, hold on a minute, we better deal with the crisis before we introduce the regulations, and so on. So you can see that this has been a very long process. Here we are, 13 years after Lehman failed, and we still haven't got the whole Basel III implemented. So that is one thing. And the other thing which it's now coming up with is it is centralizing all the central bank research being done into central bank digital currencies. And so we're hearing a lot now about, the different central banking approaches towards digital currencies. And a lot of this is informed by the Bank of International Settlements and the committee that they have got, which is looking at all this information, exchanging information between different central banks as to how they might want to use it, the benefits, the drawbacks, and so on and so forth. So that, I think, in a nutshell, is really what the Bank of International Settlements is about. They also deal in the gold market, and you will read stuff about how they run option positions, they lend stock, gold, they borrow it, and all the rest of it. So they take a hand in managing, if you like, the bullion markets, or rather not so much bullion, but more the derivatives, bullion derivative markets. This is actually quite important, because the way the derivatives markets work today is that the bullion banks take the short side of the derivatives. What I mean by that is that they are short on COMEX, which we know about. We get regular figures from there. I mean, we get weekly updates in terms of the positions of the swaps. Roughly 70% of that category is bullion banks. And also the bullion banks have short positions in the forward market in London, because essentially they offer a deposit service to their customers linked to the price of gold. So they are effectively short on those deposit accounts to their customers. An obligation to the customers, and it's not covered by bullion, if you like, on the other side. So this is a derivative play, and obviously there are big risks in derivatives, which the Bank of International Settlements is keenly aware of. And this net stable funding ratio doesn't just apply to gold and silver derivatives, it applies to all other commodities and the whole way across the derivative space.
Mm-hmm. Makes me think, who's on top of that bank, though? Like, who really pulls the strings? Are they, they control central banks? Or is the BIS controlled by another organization or a country? Or is it something on the background that we're not supposed to see? Who's pulling the strings there?
Well, I think it would be a mistake to sort of think in terms of this is a conspiracy, if you like. It's not. As I say, I think the description central banks is a fair one. They are there essentially. I think they see themselves as providing a service for central banks and coordinating risk limitation around the world. I also think that one thing that does concern me is the power that these people have. And interestingly, Augustin Carstens, who's the managing director of the Bank of International Settlements, in talking about central bank digital currencies, made it absolutely clear that the advantage that central bank digital currencies gives central banks is that they can control how they are used, and they will have information on everyone who uses it. And that's concerning, because if we use a commercial bank account, that's information basically which is between you and your bank. It's not something which is available to the central bank, except in terms of grossed up information. It is only available to the authorities in the case of a criminal investigation. So there is some protection there. Of course, you've got the ultimate protection. You can use cash, which is a central bank liability, but it's a bearer certificate, if you like, of currency, which you can use, and how you use it is entirely up to you, and it can't be traced by the authorities. The fact that the authorities want to change this or are considering changing this, and Carstensen has been very clear about it, that this gives central banks complete control over how money is used. That is something which I think should worry us. But I think in doing so, he's expressing an ignorance, if you like, about what money actually is, what currency is, and what credit is, and also the importance of human action. What he wants to dismiss human action, if you like, that sort of the thing which nobody can control. The only thing that But human action is that I will go out and I will buy what I want, or I will do what I want within the law. And that is entirely up to me. It's not up to, a Carstensen or a Bailey who's the governor of the Bank of England, or indeed any politician to turn around and tell me, this is what you want. I say that this is what you want. This is what you will want. Go and get it. No, I mean, this is not the real world. So they're trying to, I think, just take management by the state of us as individuals a step too far.